Good morning, everybody. It is June 26th. We are starting the final trading week for this trading month, and you're watching MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock, and this is where we cover everything that's occurring so far on the open in the U.S. markets. Now, we've already taken a look at what happened in the Asian markets. We've watched what's been going on in the European markets. You could check out those two segments. This is the segment where we take a look at what's going on here in the U.S. Now, before I get started and go over the market update right now, I just wanted to point out a very cool tool on the MarketStream website. Under the Premium Toolbox, you go to the seasonal chart. And this has basically a perspective where it shows you what's been going on, what we discuss and what we use charts for. But we also have a correlation line. This is basically taking all the activity over the last almost 20 years, so a little over 20 years, since 1993 in the S&Ps. And basically it plots a historic correlation coefficient. And then based on this correlation coefficient, we can actually ascertain whether or not the current market action could start to follow what is effectively the forecasted perspective of the underlying. In this case, it's the spiders, the SPY. And traditionally, in the end of June and beginning of July, you see some weakness. We haven't seen that so far. As a matter of fact, the markets are really showing strength. And if you look at the forecast for the next 20, 30, 40, and 50 days on this seasonality chart, it's basically telling you with the high forecast percentage that this is going to be moving to the upside, that the bulls have the momentum. We'll see if that continues, because we did see some information that came out this morning on the economic data front, and that was the durable orders number. It actually came in down 1.1%. Now, it was expected to come in below, in negative territory. This is a time of year where it could get a little slow on the durable orders. The expectation was 0.6%. So, to be quite honest with you, you look at a number like that, and the economic activity is not as robust as one would think it would be or want it to be, especially if you're going to be looking at second quarter GDP forecasts. This is going to weigh on that. And we've already had the Fed speak. They came out and raised rates a couple weeks ago. The markets right now, though, responding quite well in spite of the fact that that number came in negatively. And the Dow is up 100 points. You see that the diamonds are following suit, up 93 cents. That's the ETF that tracks. And the one thing that's notable is both are above its 20 and 50-day moving average. Now, this is no magic formula, as far as moving averages are concerned. It's perspective. I want to highlight that. So when you see that the markets are trading at or above these short-term and intermediate-term moving averages, it's just telling you that the bulls in this case are in control. They've been grinding to the upside. You can see the S&P's up 11, the spiders up 117. You look at the NASDAQ. The NASDAQ 100 is trading up 32. This has been the strongest index of the year. Also now, recently, very volatile. Why? Well, when you saw this gap and then this grind in between the 20 and 50-day moving average, this right here between the 20 and 50-day moving average is what I have referred to, and all of you have heard, the battle zone. That's where the bulls are being tested. They were tested, and the large cap names, the names that you know, hear, and use almost every day, Facebook, Amazon, Apple, Netflix, Google, and so forth, all moving to the upside, and were tested a week ago or a little over 2 weeks ago, but have rebounded, and you can see the markets responding. But today's action, very consolidated, even up 33 points, still a consolidated opening. In full disclosure, I do have my clients in tech, and specifically and in the Qs. The Qs are an ETF that tracks the NASDAQ, and you can see that's up 80 cents. You also see that small caps are moving to the upside. The move to the upside was after being challenged, and you can see they resumed. So if I were looking at this chart, I use this as to temper my emotions. I understand who is in control, and if there's a battle being fought, then I look at what are the catalysts either for the bulls or the bears, and then I weigh that out in my strategic approach by looking at implied volatility. Implied volatility then will give me some perspective on expectation of big violent moves. And speaking of implied volatility and volatility in general, What hasn't been expected are big violent moves. As a matter of fact, if you take a look at the VIX right now, it is trading under 10. What does that mean for you as investors and traders? That means that there's not a heightened expectation of big violent moves in either large cap, small cap, or domestically centric underlyings, despite the fact that we're starting to get some mixed results as far as expectations on some economic data. The point being is this market is moving to the upside. It doesn't matter what you say, and volatility is showing that. We're almost at historic lows right now in single digits. As a trader, as someone that has traded through the 98 pop, the 2008 financial crisis, the 2013 bull market that still continues on, the point being is that volatility has been a pretty decent guidepost, and complacency or the trend, however you want to place it, is basically in this market. The trend to the upside is strong. It will continue to be strong until we start seeing movement in vol, and we haven't. And so thus, counter-trending this has been a difficult task at best. Taking a look at some of the commodity markets real quick, crude oil is pulling back. And again, I've always questioned that any move in the market to the upside, you got to see the commodity space start to firm up. We have seen zero inflation as far as commodity prices are concerned. And as a matter of fact, we've seen the precipitous drop of crude oil, where there was forecasts at the beginning of the year, I don't know where those pundits are, of $60, $70 oil. Now they're saying it's going to be $30. Well, the point being is that the bulls are clearly not in control. It doesn't matter if you could say that it's going to go to $60, $70, but when I look at this picture, it's clear to me after going through the 20, 50, and 200-day moving average, the bulls took control, and there has been nothing but movement to the downside. The inventory data and the actual usage of byproducts like gasoline hasn't really panned out to see the demand, so crude is under pressure. You're also seeing that reflected a little bit, though, in the Brent contract, but Brent's holding up. This is the crude contract that's primarily coming out of the Middle East, Africa, and out of Europe, and specifically Russia. You're seeing a precipitous drop in gold. As a matter of fact, it dropped through its 20, its 50-day, and now it's challenging its 200-day moving average. There was a 3-day pop off of the 200-day moving average, but the shiny metal just cannot get some momentum to the upside, trading at 1245. Watch that level 1245 very closely. Now, we talked about this a couple weeks ago. Watch the moves in copper. Copper is that non-ferrous metal that gives us a very good indication of growth in sectors like construction, materials, infrastructure, all those key critical areas that we're looking at to start picking up, especially here in the United States, but we also watch it in China and Europe. Right now, this non-ferrous metal is moving to the upside, trading up at 263. Let's watch this thing. The bulls have taken control. Next level of resistance right here is in that mid 263, 264, 265 level that you see on the chart. Let's see if it gets up there. The bonds continue to move up in price. This is one where you got to scratch your head. If markets are really that strong, if there are a lot of believers, why are bond prices going up? Now, there's a variety of different reasons why they're going up. But one thing that's notable, and full disclosure, I do have my clients actually in bond positions. But the one thing with the bonds is that right now, with the mixed economic data, there could be some yield hounds that are not willing to go into high yield type investments to get their yield, and they're not buying into dividend stocks at this juncture. They may be just looking at to park into the bonds. Again, there also could be a little bit of short covering because of the economic data that came out. But TLT is up this morning, 69 cents. You have the 2-year, the 10-year, and the 30-year all up in price. That means that if you look at the yields on something like the 10-year bond right now is trading at a yield of 2.12%. To put this into perspective, we haven't seen it trade this yield since November of last year. And we're now at these levels of November, and that's where you really started to see in October and November, where there was some uncertainty in the marketplace pop in, but then all of a sudden bonds picked up. So we're seeing them come back down to these prices. and on yield, we had uncertainty going into the April, July, August. We had that early summer move to the downside, and then in October, and that's when bonds then resumed their upside yield after it was pretty clear that the economy was strong and there was a lot of catalyst for the bulls. They took advantage of the lows, and bonds pulled off. But we're not seeing bonds. We haven't seen bonds yields at this level since the uptick to higher yields in last year. So we'll watch that closely. That's a little bit of a flag for me. But again, I'm taking this all with a grain of salt because the markets are random. They're going to do what they're doing. And right now the bulls are in control. All right, folks, that's it right now for the On the Open. Taking a look at the U.S. Join me at 12:30 Central, 1:30 Eastern Time. I'm going to be doing strategy now. We're going to go over a strategy where you can learn how to replace your high-flying stocks if you're a little uncertain, but you want to stay engaged and invested in the market with smaller capital risk. Join me. I'll teach you how. See you then.